Welcome to Invested Insider, your trusted source for the latest financial news and insights. My name is Amelia Hawthorne, and today is the 17th of July of 2023. Today, we're taking an in-depth look at the latest happenings in the financial world. Jason Reynolds is joining us today to discuss inflation, central banking strategies, stock market trends, and more. So grab your coffee and let's dive in. Let's kick things off by taking the pulse of the U.S. economy. Recently, we've seen the U.S. inflation rate slow down to an annual 4%, marking its lowest level in over 2 years. But interestingly, the core inflation, which excludes volatile factors like food and energy prices, rose by 0.4% month-on-month and a significant 5.3% year-on-year.
Hi, Amelia, and thanks for having me. That's right, and these stats are crucial. While the headline figure is gradually inching closer to the Federal Reserve's 2% target, core inflation remains stubbornly high. Market analysts are on the edge of their seats waiting to see if the Fed will take action by raising interest rates later this month.
Absolutely. And it's akin to walking on a tightrope. Some argue that a recession must be induced to control inflation and boost demand, while others believe that we're merely delaying an inevitable recession. Top Societe Generale economist Koku Agboblawa recently opined that we are at the end of the beginning in the fight against inflation.
Yes, and if we take Agboblua's insights into account, he further explained that the government's massive spendings to maintain economies during the pandemic, coupled with supply chain disruptions and greedflation, are driving up profit margins to record levels.
Now let's shift gears to the stock market. As inflation fears temper, U.S. equities have been rallying. The Dow, S&P 500, and NASDAQ have all made gains, and the yield on the 10-year Treasury has decreased.
Yes, the market rally has been broadly spread. Tech stocks, including Alphabet, Nvidia, and Microsoft, have seen significant gains. Alphabet's shares got a considerable boost following their announcement about expanding the number of languages their Bard AI chatbot uses. This move could have potential global implications, making it a trend to watch.
Absolutely. But it's not all about tech stocks. Shares of casino operators MGM Resorts, Las Vegas Sands, and Wynn Resorts have also risen following CBRE's upgraded earnings estimates.
Indeed, but as we all know, the stock market has its highs and lows. For instance, ExxonMobil saw its shares tumble after news broke that it is acquiring carbon capture developer Denbury for $4.9 billion. And let's not forget Progressive Corporation, whose share price took a hit after missing earnings estimates by a wide margin.
Now, let's talk about the foreign exchange market and commodities. The U.S. dollar has weakened against the euro, pound, and yen, while oil and gold prices have seen an uptick. Most major cryptocurrencies, on the other hand, are trading in the green.
Yes, and these are significant market developments. For instance, the surge in copper futures has benefited mining companies like Freeport-McMoRan. Such sector-specific impacts can have wider repercussions on equity markets and the economy.
Absolutely. As we look ahead, the role of central banks, particularly the Federal Reserve, will be critical. Will they continue to tighten their monetary policy, or will they ease off to avoid a potential recession? These decisions could have far-reaching impacts on financial markets worldwide.
That's a great point, and as Koku Agboblawa suggested, central banks may need to induce a recession to maintain their credibility. We might see the recession hit the U.S. by Q1 of next year due to cumulative tightening. However, he expects a slowdown rather than a recession in the euro area.
Wrapping up, today's financial landscape is as exciting as it is complex. We've covered a lot of ground discussing inflation trends, interest rate speculations, stock market movements, and currency dynamics. Our aim is to provide you with a broader understanding of these factors and their potential impacts.
Absolutely. Thank you for having me. To all our listeners, keep your eyes on the data, stay diversified, and remember that markets can be more resilient than they seem. Stay safe, invest wisely, and always keep learning.
Thank you for tuning in. Remember, staying informed is the key to making intelligent investment decisions. See you next time.
The Invested Insider podcast does not offer any financial, economic, legal, accounting, or tax advice or recommendations. The information provided in this podcast or on the associated blog should not be construed as investing or financial advice and should not be considered professional advice. The views, opinions, and content presented in this podcast do not represent the endorsement or approval of Invested Insider and assumes no responsibility for the accuracy or completeness of third-party materials or content referenced in the podcast.